Home Depot reporting its first quarter earnings that did fall short of expectations, but revenue beat estimates. And the U.S. comp sales started the quarter with a 3.3% drop in February as there was really rough weather across the United States. But they rebounded sharply in both March and April. And as you can see, that stock is up by about 3.3% after the company affirmed its guidance for the full year. Joining us right now is Brian Nagel. He's senior equity research analyst at Oppenheimer. And Brian, your takeaway from what you've heard from Home Depot today?
Well, good morning, Becky. Look, my biggest takeaway is it's more of the same. You know, like I say in your show all the time, Home Depot is an extraordinarily well-run company, but this company continues to deal with rather significant headwinds in the home improvement space and with the weak housing backdrop. So it's more of the same. I think we're seeing Home Depot continue to manage well a difficult, challenging, uncooperative backdrop.
I spoke with Richard McPhail, the CFO, and he just said that they are continuing to see this momentum and this demand for customers when it comes to smaller projects, that people want to do these renovations. What they don't want to do are the bigger renovations that require them to take out equity or to borrow, that require financing for things. He said he thinks people are still kind of shocked by the higher rates we've seen and haven't adjusted to this new normal yet. How big of a headwind is that? How long do you think it will be before we actually see more demand pop up, both from the selling side of things, the buying side of things, and then the bigger projects that might follow?
Well, look, I totally agree with Richard. I mean, I think the one missing piece, and I write this a lot to our clients, the one missing piece to basically underpin a stronger sales trajectory at Home Depot is rates. Now, I know we all talk about this, right? I mean, rates in the United States are so low per historical standards. I mean, if you go back many years, decades, if you will. But, relative to where rates were a few years ago, they're a lot higher. And I think the consumer is really reacting to that. So we've got to get, in my mind, in order to get sales stronger at Home Depot, get Home Depot back to a normalized growth algorithm, we need rates in the United States more accommodative. And it just doesn't seem like that's going to happen in the near term.
One of the things that Richard pointed out, though, is that there is the availability when it comes to HELOCs, home equity lines of credit, that it just hasn't unfrozen yet. I think he said that there is $11 trillion in available funds through HELOCs in the United States. That's 20% higher than in 2019 before COVID. But again, he thinks the consumer just hasn't adjusted to this new normal. Do you think that's what happens, or do you think that it really takes lower rates before people would say, okay, I'm willing to start financing this again?
Well, look, it's a bit of the same. I mean, he's completely correct. I mean, the home equity in the United States is huge, right? It's historic. I mean, there's just a lot of, just like those numbers you said, there's a lot of home equity out there, and it's largely untapped. Okay, so that very much, so to say, gives the powder, the powder to fund these projects. But, if you look at rates, I mean, look, we can argue that there is a psychological aspect. Like I said a moment ago, rates today are higher than they were a few years ago, and the consumer just needs to get over that psychology. But there's another piece of it, too, and it's a simple affordability. Homeowners do the math. They want to do a project, they bid it out, they look at how much it will cost them to take that equity out of their home, and they press pause because it's just not affordable. So, look, there is, like I said a second ago, there is a psychology. Is Richard saying, as consumers get used to these rates, as we acclimate to these rates, as we realize these rates may stick around for a while, they may jump on these projects. But I still think the bigger piece behind this is affordability, and we just need rates to go lower in order to make these projects more affordable.
Speaking of affordability, tariffs also a big issue. It feels to me like Home Depot's in a slightly different position than the other big box retailers like a Walmart or a Target. Just in terms of their sourcing. They say that they intend to generally maintain their current pricing levels across the portfolio. They're also standing by their guidance for the full year, which means they don't think they're going to be eating a lot of the tariffs, I guess. But they also pointed to better metrics on a lot of other fronts in terms of being able to cut the shrink, in terms of being able to increase the productivity of their supply chain. How big of a factor is tariffs for Home Depot relative to the other big box retailers?
Well, look, it's a great question. I mean, I've spent an ungodly amount of time lately studying tariffs. I've become an expert on the topic. So, looking at Home Depot and then a number of the other companies I cover, Home Depot is relatively well positioned. Okay, and I think about this, I mean, just like you said, what Richard's saying, Home Depot does source a lot of its cost of sales, so to say, in the United States. Okay, so that protects them. The other real key here, though, is Home Depot has pricing power. Okay, and I get what Richard's saying about generally keeping prices the same, and I think Home Depot will work to do that. But what's happening here is there's a lot of innovation in the home improvement. Okay, so Home Depot, with its suppliers partners, are introducing new, better, more innovative products, and with those products are definitely more expensive. Okay, so what they'll do, or what they have the ability to do, is introduce these products. Those products are higher priced than the products they're replacing, and they can sort of say bake the tariff in there. So I do think you're going to see some price increases at Home Depot, but I think the company's very well positioned given its domestic sourcing and, frankly, the power Home Depot has over its suppliers, so the suppliers will eat more of these costs.
You buy the stock or not?
I stay on the sidelines. I mean, like I say all the time, I think it's a great company. But right now, I can't get too excited on the stock until we see a better sales trajectory. And going back to where we started our conversation, I don't think that happens until we get rates lower. You know, I was watching your show earlier this morning. You know, 7% or higher than 7% 30-year fixed mortgage rate in the United States is just too high. The housing market is stagnant as a result of this, and I think Home Depot's suffering. It's great to see, you know, that as spring weather has come, sales of spring merchandise have improved. That's definitely positive. It shows their consumers reacting well, but that's not going to be enough to get the Home Depot back to its normal growth algorithm with sales kind of the low to mid-single digits.